What scares me the most longer term is that we have limitations to monetary policy, which is our most valuable tool. We have important limitations to the effectiveness of that. At the same time as we have greater political and social antagonism.
Ray Dalio is a titan in the world of hedge fund management. He has achieved great success throughout his career, but what he's revealing now could reshape the whole world. Today, we will dive into Dalio's insights, break down the crucial lessons, and discuss how to get ready for the impending collapse. It's a peek into the mind of a successful hedge fund manager who offers practical takeaways you won't want to miss. This video is your key to understanding and preparing for what lies ahead. Don't miss out. Let's jump right into the wisdom shared by Ray Dalio. As we know, Ray Dalio is a well-known investor, entrepreneur, and philanthropist. He is recognized for his distinctive global economic outlook and a track record of foreseeing major financial events. Recently, he's been sounding the alarm about a potential economic downturn, drawing attention from investors and policymakers worldwide. His success as an investor stems not from luck or intuition, but from his grasp of economic cycles and the principles guiding them. So what's this collapse Dalio is talking about? According to him, it's a unique period of economic and social instability unlike anything we've experienced. In his book, The Changing World Order, Dalio explains how economic, social, and political cycles have shaped history. He contends that these cycles result from human nature and the fundamental principles governing economies. Recently, he stated that the current global economic system isn't sustainable in its current state and significant changes are needed to address growing wealth and income inequality, political polarization, and environmental degradation. Now let's delve into the collapse Dalio predicts will reshape a generation. He foresees a looming debt crisis with widespread consequences for the global economy. Dalio argues that the current economic system is unsustainable and countries' worldwide debt levels have hit a point of no return. Starting with the wealth gap collapse in recent years, the income growth of the top 1% has soared, while the bottom 50% has seen stagnant growth. This stark wealth gap contributes to the overall economic challenge. Let's discuss monetary policy and the long-term debt cycle, key factors according to Dalio. Monetary policy has a significant impact, playing a crucial role in understanding our position in the long-term debt cycle. This cycle is linked to the wealth gap cycle, where periods of prosperity after wars are followed by peace dominated by a leading power. Dalio argues that this inequality isn't sustainable and predicts social and political unrest. The rich, accumulating wealth, invest in high-return assets like stocks, real estate, and private equity. Now, on to the asset bubble collapse. An asset bubble occurs when prices, especially in stocks and real estate, become inflated due to speculation. Dalio contends that we're currently in such a bubble, particularly in the stock market. He sees it as unsustainable and expects it to burst, causing a significant economic downturn. This situation creates a wealth effect, with rising prices contributing to the bubble. The late 1990s witnessed a similar market cycle collapse, where companies aimed to capitalize on the emerging internet market. Unfortunately, many were overvalued and lacked a viable business model, leading to bankruptcies and substantial investor losses. A classic example of a bubble in which overvalued assets eventually collapse. As the bubble expands, more people join in, taking on debt to invest in these assets. This builds up a debt bubble that, over time, becomes too much to sustain. When the bubble bursts, it triggers a chain of defaults and bankruptcies leading to a financial crisis. Now let's talk about the debt crisis collapse. Governments and individuals globally are piling up more debt. And according to Dalio, this debt crisis is also not sustainable. As interest rates go up, it will get harder for people and governments to repay their debt, potentially causing a significant economic collapse. Let me share a bit about the 2008 financial crisis. It's an example of a debt crisis caused by various factors like risky subprime mortgage lending, excessive risk-taking by banks, and insufficient government regulation. Understanding the Great Depression allowed me and Bridgewater to foresee the 2008 financial crisis. If I hadn't studied that, what's happening now is relevant because the past guides the present. When the housing market crashed, it set off a chain reaction leading to the collapse of many financial institutions and a global recession. Dalio often points to this crisis as an example of the kind of collapse that can reshape a generation. Dalio suggests we're currently in the late stages of a long-term debt cycle that has been ongoing for decades, marked by rising levels of debt and leverage. Eventually, the debt becomes unsustainable, leading to a system collapse. This pattern occurred in 2008, and according to Dalio, we're on track for another collapse in the near future. Let's break down this scenario with a simple analogy. Picture a card game where blocks are stacked, mirroring how the economy is structured. Similar to removing one card affecting the entire structure in a card game, in the economy, the collapse of one element, like a burst bubble, can set off a chain reaction leading to a financial crisis. Now, envisioning this collapse and its impact on a generation, according to Dalio, it involves a mix of factors. There will be a significant wealth gap between the rich and the poor, shaped by the accumulation of assets by the wealthy during the debt cycle, leaving the less affluent behind. This hits the core value of money. When substantial deficits are run, especially for social, defense, and environmental programs, there's a need to print money to cover the gap, devaluing the currency. As a result, political and social divisions will grow, pushing people towards extreme views and increasing polarization. This heightened tension could escalate into social unrest or even civil conflict. Governments grappling with the debt crisis may alter monetary policies by printing more money, further devaluing their currencies. The rapid changes in technology bring both new possibilities and challenges for individuals and society. However, they also lead to job displacement and widen economic inequality. According to Dalio, these factors will eventually trigger a significant economic and social crisis affecting everyone, regardless of their socioeconomic status. Dalio suggests that the debt crisis will have widespread consequences for the global economy, causing economic turmoil, social unrest, and political instability. Countries around the world will struggle to repay their debts, resulting in defaults and bankruptcies. The fallout will also impact individuals, particularly those who have invested in overvalued assets, seeing their wealth vanish. Those who borrow to invest will be left with substantial debt and no means to repay. Think of a balloon being inflated. As you fill it, it grows. But if you overinflate it, it bursts. Similarly, as the economy expands and people invest in assets, a bubble can form. When the bubble gets too large, it can burst, causing a financial crisis. Despite the grim outlook, Dalio believes the collapse won't be entirely negative. He suggests that those who understand the economic principles and prepare for the collapse will find opportunities to thrive in the emerging new world. While predicting the future is tough, there are steps to get ready for potential economic challenges. So how do you prepare for the changes that Dalio thinks will impact a generation? According to him, the key is to mix up your investments and assets. Here are a few practical tips. Number 1. Diversify your portfolio. Ensure your portfolio has a mix of assets, avoiding those in a bubble. This helps when the bubble bursts, providing stability. Having a varied investment portfolio with stocks, bonds, and other assets reduces overall risk and shields against market ups and downs.
Diversify well. Diversify well into diversify of asset classes, but diversify of countries, diversify currencies. So think about diversification. If you diversify well, you lower your risk without lowering your expected return.
It also means investing in countries and currencies that are less burdened by debt and more likely to handle economic challenges. Dalio suggests India, despite challenges, could be successful in the future, making it worth exploring. Number 2, build an emergency fund. To prepare for economic uncertainty, a crucial step is building an emergency fund, ideally covering 3 to 6 months of living expenses. It acts as a safety net if you lose your job or face reduced income. Number 3, reduce debt. Take a proactive approach to eliminate high-interest debt, specifically targeting credit cards and personal loans. Swift repayment not only alleviates your monthly financial burden, but also establishes a stronger financial foundation, affording you increased flexibility in the face of potential income reductions. By shedding high-interest debt, you enhance your financial resilience and create a more secure financial standing.
Though we have a real issue for the United States debt in the world, because we're selling all this debt. We have borrowed a lot of money, okay? And now we're having a problem selling that money around the world.
Number 4, be prepared for the unexpected. Embrace the crucial lesson from Ray Dalio on the value of anticipating the unexpected. While investors often concentrate on short-term gains, Dalio underscores the importance of adopting a long-term perspective. Prepare for significant economic or societal shifts by diversifying your outlook beyond immediate gains. This foresight equips you to navigate unforeseen disruptions, contributing to a more robust financial strategy. Number 5. Invest in yourself. Direct your focus towards skill and knowledge development aligned with current job market demands. This deliberate investment in your personal and professional growth not only ensures ongoing employability, but also amplifies your earning potential. In times of uncertainty, possessing a diverse skill set becomes a valuable asset, enhancing your adaptability to evolving market dynamics. Number 6. Live below your means. Strategically prepare for economic uncertainty by adopting a lifestyle that resides comfortably below your financial capacity. Cut unnecessary expenses, creating room for substantial savings. This disciplined financial approach not only acts as a safeguard during unpredictable financial climates, but also positions you to weather any storms that may arise. Living below your means serves as a proactive measure, fostering financial stability and resilience in the face of economic uncertainties. Ray Dalio warns that if we don't tackle these challenges promptly, they could usher in a lost decade marked by economic stagnation and social upheaval. He emphasizes the need for a comprehensive solution that takes a holistic approach to address the interconnected issues at play. Delving into the details, Dalio's perspective on the impending collapse serves as a stark reminder of the vulnerability inherent in our economic system. While pinpointing the exact timing of the collapse is impossible, the looming threats of the wealth gap, asset bubble, and debt crisis suggest a potential catalyst for a significant economic downturn. However, Dalio offers a glimmer of hope, highlighting that those who are well prepared and adaptable will thrive in the evolving economic landscape. Thanks for watching this video. Share your thoughts below. And if you found this video useful, consider sharing it with a friend. Don't forget to like, subscribe to the channel, and turn on notifications to stay updated on new content.